Good evening. Ira Epstein, and here we are with your SPDR-ETF stock market wrap-up. And this wrap-up is for Wednesday, and we're at the 9th of July, 2025. Wow, what a run this has been in the stock market. Insane is the right word. Let me show you something for tomorrow. You're going to be getting jobless claims coming out at 7:30. St. Louis Fed President Muslim is going to be speaking in an OMFIF event, and that takes place at 9. We'll see if he mentions anything. We saw the Fed minutes today, and I'll get to that with you in a moment. The EIA natural gas storage report comes out at 9:30. In news, we got more tariff news. It was another, I think, 5 or 6 countries, and they're getting reasonable tariffs in the 20 to 30% range, but not Brazil. The president's pissed at Brazil with the BRICS statements they're making, what's going on, how they're treating the old president, and he says, let's hit him with a 50% tariff, and the 10% BRICS tariff, if they say anything derogatory about the dollar, kaboom, so 60%. FOMC members, let's talk about that a little bit. So what we've got here is when you saw the notes, 2 of the members did come out in favor of a July cut. Other members, some of them said no cut at all, but the majority they think there'll be 1 cut this year. So that's where you're at. But to a person, they're all saying, that I've seen, where's the tariff impact? They're not seeing it yet. And obviously what's going on with that is, number one, there was a lot of front-end buying. Number 2, the newer stuff coming in, maybe the producers taking part of it, the wholesalers eating part of it, and then the retailers. So you've got different parts of this that can be going on, and they could be spreading it out. We will see. But once you start getting up to these 10, 20, 30, 50% tariffs, I just want to tell you, it gets serious over time, and I do not buy into the fact that it's a one-off event. I think that's nonsense talking. Once you kick the price up by 20%, 30%, let's just stay there. That's there. What about regular price increases, all right? How many people really lower prices? You don't see that too often. So these are things you've got to think about over time as to where this is going to be. And I understand what the president's saying. Another thing that is happening in the stock market is as you're going up for new highs, and you are going up for new highs, these markets are literally on fire. Nvidia today became the most valuable company. I think it was it was 163 and a fraction. It became a $4 trillion company. $4 trillion. It's hard to believe. It's the most that any listed company's ever been worth. And that's from the GE days. And I can go on. There's so many Exxons and all the big boys. This is just something to behold as to what it's doing. And a rising ship, rising seas lifts all ships. And that's basically what you have going on. But it's more than that. As these stocks become worth more money, what do you do with it? You've got billions in the bank. What do? Well, you're seeing WK Kellogg today after the market closed. They've got a takeover bid from Ferrero and a $3 billion bid. So the stock jumped 40%. But they're not the first. We've been quietly seeing this going on. So there's organic growth going on, and then we've got growth by acquisition. And why not use a rising stock? I think so many companies blew that on the last go-round and didn't take advantage of that. And there's plenty of companies that are just languishing there that have good value. Maybe this is what you're going to see. The idea that the market's coming up for the summer and not going to go anywhere, I think the second part of the year can be quite strong. And I realize a lot of people are saying, well, we forward bought so much. Look at copper, you're going to get a 50% tariff. Steel, aluminum, it's all going to slow it down. We'll see. We'll see. We'll also see if the president doesn't modify. Remember, everything he says, he seems to modify. The tariff fear is not as big as it was so far. That's something you have to look at. But we have our big trade partners ahead of us. I haven't seen anything on Mexico. I haven't seen anything on Canada or the European Union yet. We need to get those in because those are what the market's going to look at really hard. We'll go from there. All righty. So let's take a look at chart action and see what you have. Starbucks, they had a bid for their Chinese division, Apparently something went wrong because you took the market from 97.88 back down near the day's low of 94.66. It was a positive close, but not that impressive of a close. When we see what happened, you can see how it just lifted out of this range. It got up to the 200-day average. It's done this a few times. It spit over, and that just lasted a few hours. And by the end of the day, it threw itself back. And that combination that I teach you, the lethal combination of an upper Bollinger Band along with the key moving average, in this case the 200, well, that is something you want to keep your eyes on. That's how I feel about it. By the way, you know I don't show you the 50-day moving average on these charts. It'd be too many lines. I do that in my subscription videos because you are getting golden crosses, and that's when the 50 crosses the 200-day average. If I can put more moving averages, you'll get dizzy with them, but the morning subscribers, because of the way I do it, you get to view it, you get to see it, I explain it, works pretty neat. You can see where you're at right through here. I see support back at 93.11, but again, this is a company that's restructuring itself. I'd like to see it do more work in here. We'll see if that is what it's going to do. Rare earths aren't going anywhere right now. MP Materials, not a performer today. There were several stocks that didn't perform well. This is one down 3.7% today. It's very oversold. Our work has not been bullish since you lost the bullishness right back here, and you lost the embedded reading, and in the slow stochastic, kaboom, right on down. DoorDash. Well, now are we embedding? So it takes 3 days with my slow stochastic formula, which is different than the standard formula. And by the way, before I ever took this out the way I am, I ran it by George Lane, who founded Slow Stochastics. He was the author of all this, and he never could tell me what a stochastic really is. He gave me crazy definitions. I loved him. He was from, he always wore all this jewelry from the Southwest. It was very, very interesting man. Cowboy boots, the whole thing. But I showed him my formula and I explained why, and he thought I was onto something. He thought it was neat, in fact. He said, that's what the formulas are for. Play with them. And you got both numbers over 80. That was Wednesday. Yesterday, you had both over 80. What about the day before? Yeah. And what about the day before? No. So you just embedded. So I'm now on the buy watch on Dash. So I'll be looking at this market hard until the red line closes back under 79, looking to see can it get up, make a new high, get into the upper Bollinger Band possibly. Google, not that good of a performer today. It was up 1.3%. It's trying to come out of this pattern where it's just going sideways a lot. Now, hurting all these companies, you know, their browsers are seeing more competition coming out. OpenAI, others are going to release browsers now, and that becomes an issue. They're going to try to take money away, and that's basically what it is. Come use my AI. It's better than what they have. That's what you're getting the stories of. And that's why this is not a participant right now. In Netflix, as you know, I was looking for a pullback, and still, I think you can still pull back a bit here, but the market found its support where I thought it would, the 18-day average. How often do you hear me say, if you get a market that tries to embed, gets overbought, or embeds and loses it, sometimes you pull back to that 18-day average of closes. I call it the line in the sand. It's the neutral spot on a chart, and from there tries to rebuild. What it has kept is it's kept the upside bias as I define bias. When a market is over the 18-day average, I have automatically bullish bias. Under it, bearish bias. It's a filter on the swing line, a filter on do you have higher highs, higher lows, ways that you look at it. I only use 5 indicators. And in those indicators, that's the way you should go. You don't want to put on a chart MACD with slow stochastics, with relative strength. You want each indicator to be able to stand on its own and filter out trade ideas. Did you hear what I just said? Not filter them in, filter out. And if it can't filter it out, why aren't you getting involved? One way to look at it. Robinhood, I so bad want this market to come down. It's lost its bullish reading. Normally, that's all I can say. It's not all the time by any stretch. Normally, when you lose the bullish embedded reading, prices try to make a run to the closest main moving average. In this case, again, it's that line in the sand, the 18-day average before it makes a new high, if it's going to make a new high. So we'll see if that happens. Tesla, no. Now you're seeing calls by Dan Ives and Tesla's Musk coming against Dan Ives. I think Dan Ives is one of the world's, he loves Musk. He believes in the man tremendously. And, you know, he's the guy from Wedbush on with the crazy outfits all the time. He's quite bright. And Musk just can't handle the criticism, and he's right. Get out of politics is what he's really saying. Go back to running your companies. That's what we want to see you do. Go back with your ideas, and we'll see. But when you start coming against him as well, the board may take notice, and that's what Dan thinks is going to happen here, and try to rein Musk in again. I don't know if they can or can't. I don't know if he's willing to be reined in. I don't have the slightest idea. Here's what I know. The chart is ugly right now. It is oversold. It's a market under pressure. It's lost a tremendous amount since its peak. The Tesla car is not what it was 4 years ago. Now everybody's got a phenomenal EV car. Look at the Chinese cars. I read Motor Trend. I read all the car magazines. I love cars. And what I'm reading, it doesn't bode well for the Tesla car. First of all, they need to upgrade. I didn't say it doesn't work great. I'm saying at $45,000, they have competition under 30 that work pretty darn good, and they have a lot more luxury than that car offers. When we look at stocks, as long as these chips are still leading the way, away you go. How many times did we hear people say you got to rotate out of the tech sector and get into others? A market sector is good until it isn't good. All sectors correct, but there's a difference between a correction and the end of a move in the sector. We're not done, clearly. And you can see where we're at. Are we going to get up to the upper Bollinger Band? Your get me out will happen when the slow stochastic closes under 79. That's like, to me, you've heard Golden Cross, Death Cross, all these different things that happen. Learn about that. It's momentum trades. When we look at the financial sector, I just said it to you yesterday. I said, this looks crowded. And the fact, and this was the close of business Tuesday, you were flirting with losing the embedded reading. And I said, unless you jump right away, go look at yesterday's tape, the math's going to work against this market, and it's going to try to lose its embedded reading. And it's up 19 cents, big deal. It lost its embedded reading today. You can see that. Now, can it gain it back? Only 1 day takes it, tomorrow. If it can't do it then before you get up here, I wouldn't be surprised that you make a run for wherever the 18-day average is. In XLI, as long as you have that embedded reading, I'm still looking for the markets to go higher. In XLE, higher lows, higher highs. Look at how the market's challenging this. That conference is going on in Vienna, Austria right now, where OPEC Plus members are meeting and giving their ideas as to where they're going to go, what they think. Tomorrow we get their projections. So you want to definitely stay tuned to what they're saying. And shortly after that, we'll get the EIA, IEA. They're all going to come out and give you their projections. So we'll get some pretty good ideas what's going on here. There's a balancing act going. They don't want prices to get too high because it'll attract U.S. shale producers. But they want to keep it high enough where as they keep pumping out more oil, they're making as an aggregate more money. It's not about, oh, I'm not making enough per barrel. If you put out enough barrels, you're making a heck of a lot of money, especially when the cost of bringing it out of the ground, like some of the Mideast members, is this small. And that's what you want to keep your eye on. That's why the Saudis are playing this game, and they're being quite good at playing the game. They're keeping the U.S. to a degree happy with prices not shooting up. At the same time, the not happy part is they're not going to get shale producers unless you get close to $70 WTI grade. Gold market. You got higher highs, lower lows. It's not a participant. This is a stock market. This is a risk-on trade environment, not a risk-off where you want to own gold and you want to own things that are secure. That's what's hurting this market right now. Silver is looking to say, if all this going on, is manufacturing going to be good or bad? I told you I think that it's building on this right now. It's playing back and forth sideways, not a trend, sideways basically. Copper, well, copper is now wondering, the tariffs that Trump is putting on 50% on what? There's still no definition on what. And that made the miners back off a little bit here. Still a good gainer today was Freeport and others if you were watching them, but got to pay attention to that. In BND, all right, what are we doing with interest rates? You saw interest rates pull back today as traders read the Fed minutes and walked away because they want to be bullish. They walked away going, it's just a question of when this starts and it won't be one-off. At the other hand, some of the members in the minutes did say, if you're looking at interest rates, really, how far away are we from a neutral rate? That becomes an interesting question. Neutral is where you're not spurring on a lot of growth or inflation. You're sort of in between. Well, we might be there. I don't know that we're that restrictive right now. Everybody says restrictive. The stock market's at all-time highs. UUP, dollar stuck right at that line in the sand. So the bear market rally's gone there. Now the market's trying to figure out what to do next. As the euro, I wish it would finish up and get to the 18-day average, and then I can make some better decisions on it at this point. It's void of a trend. The bias is up. If you want to learn a lot of what I'm doing here, you can do it in our free offers on our website, especially if you get our futures trading kit, because in it are just so many booklets and links to different events, the Chicago Mercantile Exchange's courses. I think my courses are great when you take a look at them because they teach you the way that I teach trading. So it's a little different than a lot of people. Our trading platform, this is the LTP platform that you see behind me. It is neat. Get a lot of news in it. You can subscribe to other news services that come through it. I use the QT news there that comes with Dow. I get Reuters. I get a lot of news. I like news because you get different points of view. And you get all these books. Notice behind me how this page is going. Well, when you get to the IraEpstein.com free offers on the top left, you just click on the blue. It puts everything in a cart. And at the very bottom of the page, you put in your information. It takes us a day or two, no more than that. And we'll get everything out to you via an email, and away you go. Can't be easier than that. I'm Ira. You have yourself a great evening. I'll catch up with you in the other videos tonight and, of course, in the morning video. You take care.